So you heard us mention that the Case-Shiller index on housing prices showed that the prices in March rose 21.2% annually. That's a record. But a new report by real estate brokerage Redfin, whose business model works to undercut the competition, revealed that nearly 1 in 5 sellers slashed prices over the 4-week period ending on May 22nd. That is the highest rate since October of 2019. Yes, before the pandemic. Perhaps even more telling, 13% fewer people searched the term homes for sale on Google than a year ago. Could this be the beginning stage of the red-hot housing market finally reaching its peak? Let's ask famed realtor Ryan Serhant, the star of Bravo's $1 million listing. Ryan, I know you're New York-based, but you have clients all over the world. Are you seeing anything that resembles what Redfin just reported, that the cooling-off period is starting to begin, maybe?
We're seeing a marketed cool off over the past, let's say, 90 days, as single-family home sales have hit a 2-year low, right, this past April. But at the same time, like you just mentioned, the average house price has increased over 31% year over year in April. So as inventory finally comes back to market, what we're seeing, boots on the ground, is that buyers who've been stuck off in the wings. I mean, we have so many buyers who couldn't buy over the last 2 years because they're being outbid. Cash buyers, Blackstone buying up 500 houses. Now they're saying, wait, I can buy now? Okay, great. And they're jumping. And those are the people who are keeping the prices higher, regardless of where interest rates are at the moment.
Yeah, and yet it comes simultaneously as mortgage rates since December have certainly spiked. Something weird happened, Ryan, over the last week. Mortgage rates for 30-year fixed actually ticked down a slight bit. They came in at 5.27%, whereas 2 weeks ago they were around 5.34, something like that. Tell me right now what that means, because we still know that the Fed is on a path, at least we thought, of raising rates.
Remember, this is the first time the rates have been above 5% since February 2011. So we've had a long, long time of talking to purchasers and sellers and saying rates are going to go up any minute. And then we look around and they don't go up. So it's kind of this idea that the Fed has basically called everyone's bluff. And now, 10, 11, 12 years later, now rates are finally starting to rise. And looking forward, I think that the U.S. housing market is moving away from a low interest rate environment that we've had for the first time in a dozen years. But it hasn't yet put a wrench in the plan for the housing market. We have a 5-year we have 5 years of housing inventory that are not on the market. Right? Home builders have not been building for a long, long time. And there are still so many purchasers who need a house that don't have one to go to. I mean, we still have buyers as of right now in this market, as rates are going up, tech stocks are coming down, who are saying, I've got nothing to buy. And I think that's going to keep going for quite some time.
Yeah, I mean, the inventory piece of the puzzle is still not entirely solved. I need to know what you're seeing on the ground when it comes to that slowdown that you referenced at the top of this interview. You've got a home, say one of your homes listed is in Turtle Bay, which is Midtown East, all the way to the East River. This is a $12 million home. So it's definitely a high-end, high-quality house here, 5-bed, 5.5-bathroom penthouse. Tell me about the number of people that you're seeing show up initially or just a couple of weeks ago to the open houses. There were bidding wars last year where people were just frantic. Is that changing?
To be honest, it has changed a little bit. Now, that property you're talking about is on 44th Street. It's a penthouse. It's on the market for just under $13 million. That's part of our signature collection, which is our high net worth department. That buyer, through thick and through thin, is always here. Sometimes they're here in droves, like we saw at the end of 2020 and through last year, as we were doing 20, 50, $100 million deal over each other. Now they're being a little bit more cautious because remember, even if you're buying a home for 10 million or 1 million or 100, you're not purchasing the purchase price, right? You're purchasing that monthly payment. Even if you are buying in cash, rising rates are affecting your wallet in another way, right? Maybe you've got other debt for your business. Those rates are affecting those cash flows that are affecting what you're able to use to purchase a home. Maybe they're affecting you in the markets in different ways. So everyone feels it. And the Fed thinks that they're doing their job by getting people to use cash. But what it's really going to do is it's going to put people off to the sidelines, and they're going to say, oh, I guess I shouldn't buy anything right now, because if I actually have to pay for the money, I'm not used to this. We're just going to sit back and see what happens. And that's what I'm afraid might happen in the near term.
Yeah, it looks like that is happening, certainly in some pockets of the U.S., although not Tampa. Tampa saw the biggest price jumps, at least for the Case-Shiller index. But again, that's rear view. That's 2 months lagging in March. Ryan, come back
100%.
again. Thank you very much.
Thanks.